I think we see a big change of landscape in any Indian issuers, either a government or the corporate. Their ability to issue various instruments. As everybody knows, the equity market, of course, has been a darling of the investor, domestic investor, fueled by SIPs and pension monies. And except for the last 3 months, we've seen that ability for any kind of corporate to raise funds in equity has been easy. However, the reforms which we've seen is essentially in the physical infrastructure, which government has done a lot of things on road as well as power. And I think those are the assets which we have seen. The operational assets are able to take the debt capital market route and the REIT, or the InvIT route, which today we are talking about almost a 6.5 lakh crore of market value of InvIT, which has happened over the last 3 years, which is sizable capital which is moved towards that asset. Even if you see the rental assets, we are seeing around 3.5 lakh crore of market, which has allowed ability of the developers to raise capital in the market. So operational, and if you see the bank credit today, the debt capital market gives as much funds availability as much as the bank credit. So it has become an equal weightage for people to have ability to access funds. Last 2-3 years, of course, we've seen the rupee rates and the dollar rates have been not very different and not giving enough opportunity for issuers to raise foreign capital unless they need the size of the capital. I think given what RBI has done in terms of ability of corporates to raise there as well, I think that piece will also be available. We also have some of the infrastructure institutions which have come today in the market, where the long-term capital availability will be available to most of the infrastructure project once the project risk is over. So I think it's overall ability to access from every kind of rating. Even if you see the share of AAA rating on a domestic bond issuances has gone down. It's a beginning, but it's a big step towards how the markets are changing. So debt capital market from NBFC to bank credit to corporate markets, I think has been going very, very steadily.